Oh, good evening, everybody. Hopefully, everybody can hear me as was before, and we can see the slide up in front. We're about to start this live trading webinar, and I want to get started straight away because there's some things in there that I want us to see straight away. So let's get on with this risk warning. Please, guys, have a read through this Australian disclaimer from CMC. I'll give you about a minute or 30 seconds or so to have a good read through that. If you want to have more information on that, cmcmarkets.com.au. If you don't agree with this disclaimer in terms and whatnot, then please leave the webinar. Okay, hopefully everyone's had a good read of that. And then on to our risk warning at Trade with Precision. Our full terms and conditions are at tradewithprecision.com. But basically, what that's saying is that this is for educational purposes only. Will not be held liable for any damages or if you were to lose any money or anything along those lines. So this is purely educational in nature. Take what you will from this and have a good read through that risk warning. If you disagree with this risk warning or the CMC disclaimer, then please leave the webinar right now. Okay, let's get into it. First of all, this particular webinar is going to be us looking for live trades in the market. And also want to throw in a couple of things there just to help you guys to understand or maybe sort of plan for the week, not so much understand that I will be trying to get you guys to understand some of the ways that I trade and that we teach at Trade with Precision. But more importantly, I just want to point out some things that are very, very important and point out some levels that out there at the moment that are things that we want to take notice of. Predominantly pretty much all the trading that we do at Trade with Precision, bar a couple of strategies, it really is trend following. And the reason it's trend following is simply because the trend is your friend. It's a lot easier to follow the trend and go where the money's going. So you'll notice tonight that a lot of what I say and how I trade and how I interpret things will be based massively around trend, and I want to show that to you guys. So let me just start by having a look here at soybean, because I had a little scan through the market before, and soybean was or still is, an opportunity that I think is available now. So we'll have a look at this before raising an order. So what I'm going to do now, you can see the chart is in here. What I've actually got on my charts is I've got a 200 period exponential moving average, a 50 period exponential moving average, a 20 period EMA, and a 10 period EMA in these colors that you can see. They're very, very easy to add. And I've got a MACD and an RSI, but I'm paying more attention to the MACD, looking more for convergence. If I see divergence, it doesn't necessarily mean I'm going to stay out of a trade, by the way, because the way that we trade is we try and layer technical analysis elements on top of each other. So the classic example is where somebody's read lots of books, been on lots of courses, done lots of seminars, webinars, you name it, they've done it. They've read all the books, they understand everything. They can tell you how MACD is calculated. They can tell you everything about everything you don't really need to know, and they're not making any money. Now, I can speak from experience there because I had done that when I first started trading as well. I thought that it was really important for me to know a lot about trading. It's actually not. The most important thing when you're trading or to learn is to learn how to trade, not about it. Learn how to do it. So what I find, and especially a lot of the people that we educate at Trade with Precision, we get a lot of people that kind of say, "Oh, Craig, look, let me get to the advanced stuff. I want to get to the advanced stuff. Show me the real good stuff." And basically, sorry, I've just been distracted. I saw someone says they got no sound. I think everyone else is fine. But yeah, they get distracted on what's actually going on. They don't look at price anymore. They look at all their indicators. They focus all their attention on the names of things like an ascending triangle or a shooting star or a doji, and they fail to actually understand that trading is about learning a skill. It's about learning to do something just like you have in any other form of life. So throughout this event, take notes if you feel the need to. I'm going to be telling you little snippets of how I trade and what I do, and you'll see why. Some of you will trade in a similar kind of way. But ask questions as well. Feel free to ask any questions, and myself and David will answer those questions as soon as we possibly can. So, without any further ado, I want to talk you through what I'm seeing here on soybeans. Now, first of all, the CMC platform, let's just go through a little bit of housekeeping here for those of you who are completely new to using the platform, or not so much the platform, but the new improved CMC platform. Let me show you the ins and outs, the basics of how it actually works. So let's go down here. You can see on the left hand down here the intervals. It's very, very simple. I'm now looking at a 4-hour chart. You can see down here on the left, it says 4 hours. So this is each one of these bars represents 4 hours. What I'd like to do now is I'd like to have a look at the bigger picture and just scoot out to the daily and see how we're looking here. Now remember, I'm focusing everything on trend. So you can see we were in a really nice uptrend. That's defined by higher highs and higher lows. That's all. That's a simple definition of an uptrend. And geez, it was a beautiful one. Beautiful, beautiful uptrend. Now we've got lower lows and lower highs. So we've got a downtrend here on the daily. Okay, so daily is in a downtrend. That's good. Now I'm going to go back down to the 4-hour because we always use multiple time frame analysis. Don't just trade on one time frame, because the bigger picture might be somewhat different to what you're seeing on that lower picture. So for example, right now we're seeing a downtrend here on the daily. I want to then see that matching up on the time frame that I'm trading from. I'm going to have a look down here on the 4-hour. You can see clearly here a series of lower lows and lower highs coming in there as well. So these two match up. That's the first thing. That's a tick. Now what I want to have a look at here, what the actual trade that I'm looking at is, see this little red bar here. Now if I just zoom in just a touch, there we go, before it goes, there we go. You can see that what we've had through this, actually let's go back out here first. As the moving average has got in the correct order, that's the 10 and 20, so the 10 below the 20 and 20 below the 50. The 200 we're not so concerned about. I actually very rarely use a 200, to be honest. I think it's just had a habit that it's still on my charts. Once we got in that correct order and the averages were fanning, what happened was price pulled back into these averages. Red candle, moved away. Back into the averages, red candle, moved away. Back in, moved away a little bit. It's pulled back in, and it's got a little bit messy in here. It's sort of gapped up, went a bit sideways. Now what we've done is we've come down. We've got the moving averages all in the correct order once again. We've broken through these lows, and the downtrend has resumed. Now, what we want to see here is we've got this little red candle like we had back here, like we had back here, like we had back here. Is there an opportunity for us to place a trade? Now, when I look at my trades, I score them. Okay, so I'll set a trade up and I'll score it out of 10. Now, this trade I'm looking at here would probably be about a 7 out of 10. I would normally look to take trades 8 and above. Now I'm going to pick out the best trades that I can find on this 1 hour that we've got, and also give you some ideas for the week. But I actually really like this trade. The only thing that is going against it, really, as some of you have noticed, is that there's a little bit of divergence here. But let's have a look and build a picture as to some of the reasons why it's actually good, okay, as opposed to why you wouldn't stay out just for that reason. So let me just draw this support and resistance line. So actually, I'll just draw that and get rid of that so I can explain how I got there. So we're just over here along this bottom tab down here. Pretty much with the new CMC platform, everything's just super tidy. It's super close. It's very easy to get to. It just takes a little bit of practicing. Once you get used to it, it becomes very, very simple. And it takes about, I reckon, 15 minutes of diddling around to get fully used to it. So we're going to go over here to technicals. Sorry, we're going to go over here to drawing tools. Now what we want to do is we want to draw a support and resistance line. So I'm just going to click on that. Well, I'm just going to draw it through here because this is where we're rejecting, this level that we're rejecting here with this little red candle. And you can see right now that's perfectly lined up with the old low. Okay, I've got a question. I'll come back to that in just 1 second. So if I just zoom out a little bit, you can see we've got 2 touches there. We've rejected, we broke down through it there, and now we're testing that old level. But interestingly, look at this. Interestingly, back here, old resistance. Look at that. So we had resistance, we broke out through it, we had a good move from there. Then as we came back down, bang, we tested on it, We tested it again, then we broke through. Now this is the first test to the downside. So what we're seeing here is a great downtrend on the daily, a great downtrend on the 4-hour, back into the sell zone, back up into this old level. There was resistance over here, it was support here. Now the old adage is that old resistance becomes new support, and old support becomes new resistance. So being that we've broken down through the support, pulling back up into this resistance, that is now a good level to have a stop loss. So what we're going to do now, oops, go back to the 4-hour. What we're going to do now is we're going to come across here and we're going to put in an order. So how are we going to do that? Well, up on this top left hand corner you'll see that it's got the high, the low and the close. That's the information that we need. So if I just hover my cursor over that bar there, the high was 1381. So we'll just go one above that. So we go 1382. All right, just to make it nice and round and easy. The low is actually, let me just go back to chart type because I forgot another great feature here. There's two options. When you're placing a trade, you either look at the spread, the difference between where you can buy it and where you can sell it, okay, and then you add that to your stop loss. Or an even easier way is to go to here. When you're going short, which we are now, which is hopefully the market's going to roll over for us, we're going to, for our stop loss, go to the buy. Okay, so that's where our price is going to buy us back out of this short position. The high of that candle is 1381. So we're going to go for a stop loss of 1382. So that's our stop loss. Now we want to get short, so we need to go and check the sell price. I'm going to get short as it breaks down through that candle. Okay, the low there, 1372.28. Okay, let's just make sure that one didn't go lower. Okay, cool. So what we want to do right now is we want to raise an order. So we're going to have a stop loss at 1382 and we're going to have an entry at 1372. Now that we've got that information, let's minimize this chart, come across the soybean and place the order. Now this is where the new CMC platform just nails it. They've just done this so well, and I'll show you why. You're probably all used to using it, but we're going to give it a crack now. I did the calculation. Okay, let's just try it. We'll just put 5. So you put in units. Don't worry if you get to that point and you go, oh gosh, I don't know how many units, because it's going to help you out. What we want to do over here is we want to come to limit SE, okay, and we're going to come over here and we're going to put in our level. Now the level we want to do is 1372. Okay, so we put stop entry in there because as it breaks down through that candle, we want to get triggered into the trade. Okay, so we've come down, we've hit this button here, limit, put in our level, stop entry. Another great thing about the CMC platform is this boundary. Now, most people that are trading out there, you'll have heard the word slippage, and some of you, hopefully not many of you, hopefully none of you, have had slippage. Now we all get some, okay? It's just it's a part of trading. But the best thing about this platform, well, not the best, but one of the fantastic things about this new platform is this boundary feature. So let's just say that some massive news comes out and something happens and there's been a massive cyclone or something and the whole soybean crop's been taken out of this massive plantation or whatever they call them. And soybean prices all of a sudden just go absolutely crazy. The market gaps and I get drilled. Okay, I get a really bad entry. I get an entry of rather than 1372, I get an entry of 1360. So a lot lower than where I want it to be. That's not good for me because my risk is going to be a lot more. It's not the trade that I want. What I can do to avoid that is this. I can type in where I want to get filled. So if it gaps to 1371, that's okay. I'll take that. If it gaps to 1370, I'll take that. But anything beyond this price here, I don't want to be filled in the trade, and they won't fill me. So that's a fantastic feature there. I really like that. So that's that one. We're going to hit enter there. Every time you do anything, just hit the return key, and it takes you to the next step. We're going to put in our stop loss at 1382. And Now here's where we've got to work out our position size. Right now, I'm going to hit enter first. Right now I've got 5 units up there, and you can see I'm risking 51 cents. Now my account's at $9,904.80. I want to be risking 1% of my account on this trade. So I need to risk roughly, call it $100. Okay, 99 bucks is what I need to be risking. So all I have to do is this. Let's try 900. Okay, so now you can see it's $92.38. Let's go 970. $99.55. That'll do us. Okay, so what we've got now is we've got our orders. Our order is set for our entry at 1372, which is what we want. Our stop at 1382, which is also what we want. We've got our risk managed beautifully. We've got our boundary order in, so we're safe from any big gaps. Now we want to add in a profit. So on this trade, what we're going to do is we're not going to be greedy. We're just going to go for a simple 1-to-1. Now what I mean by 1-to-1 is I've got 10 ticks of risk between my entry and my stop loss, so I'm going to go for 10 ticks of profit, so 1362. And you can see where my take profit is exactly the same as what I'm risking. So now effectively I can go out and play, I was going to say play golf, but it's a bit dark for golf. I can go fishing, I can go do whatever it is that I want to do, and I know that when I hit that button I'm safe because I've got my boundary and I've got my stop in and I've got my limit in, so I can actually take profit, or CMC will set it up so they can take profit for me while I'm out. So what I'm going to do now is hit confirm. As always, we double check what's going on here, just to always write it down on a piece of paper and then double check it in the market, which we're happy with all that. Hit close. Now down in this tab here, I've got my positions, which is currently I'm not in anything. I've not been filled in any trades. And I've got my orders. You can see the order here. Now this trade will become invalidated if the high of this candle is broken. Okay, so if the high of that candle is broken to the upside, then that trade will then be invalidated. It's as simple as that. If it was to be invalidated, if that does happen, all I need to do is come down into the order section, click cancel order, confirm that, and it's all done. Okay, so that's soybeans. We've got an order there on soybeans. We'll keep our eye on that. I actually really like that trade. We're going to be getting out down at this level here, so pretty much at the old lows, which is just great. I think it's a cracker for a 1-to-1. I think that looks really good. So that's not all we're going to be doing this evening. We're going to have a look a bit more around the market, and I've got a question here. I've got, how do you scan the market with so many commodities, currencies to find the trending market? Well, generally what you want to do is give yourself like a watch list, like you can see over here. Now if I just delete that, what you can do, there's two options. Okay, you can either have a watch list like this one, which you might have what you're looking at for the day that you put into a watch list. It might be what you're looking at for, well, the only things that you look to trade. But all you need to do is this. Okay, let's think. Let's go for gold. Let's see if there we go. Gold everywhere. Okay, so we're going to take gold. We're going to put it into our watch list just simply by picking it up, dragging it over. Job done. Now then you've got to start scanning. Then you've got to start looking at the market. You've got to start seeing what's out there, how things are looking, and what's actually going on. Now what I'm going to do is I'm just going to type it in over here, because I've got something that I want to look at and take you through. The first thing I want to look at is GBP US dollar. So it comes up here. All you have to do is click this little arrow. Bingo. The chart comes up. Now I just always blow it up to nice and big. It just makes it so much easier to see. It's not a big hassle. Now immediately looking at cable, which is GBP USD, what I'm seeing is we've got a downtrend. Okay, I'll just jump out to the daily as well. Daily, well, we've just kind of rolled over. Okay, we're just making a low as we speak. We've broken down through here. It's not exactly a downtrend. We've just sort of rolled over and we just continue, but on those lower time frames, at the 4 hour, we've got a downtrend. So what you really have to do is, generally, I have a 4 hour time. As you can see, my default time setting is at 4 hours. Okay, so I can pretty much tell on a 4 hour chart if the daily is going to be in a downtrend or what's actually going on. Then I go down from 4 hours, I'll go to 1 hour. Jump down onto the 1 hour chart, and it gives me a little bit, I can see a little bit closer in there. I can see a little bit more, deep into what's going on, and I get some more features there. Now, the time frame I want to have a look at on this particular chart is the 15-minute time frame. Now, this chart, it's pretty much, it's relatively naked. There's not a great deal there. I would like to add, I'd like to add in here my pivot points. Now, I'm not sure if everyone's familiar with pivot points. To cut a really long story short, and again, we don't need to know how everything works, we just need to know how we use it. Pivot points are calculated by the yesterday's prices. Okay, you can go search it in Google if you really want to know what it's all about, but I'll show you how we use them. So I'm going to go to technicals down the bottom here, hit overlays, and you can see with the CNC platform, look at all the options that you've got. Okay, now you could be that person that's putting together a strategy for themselves and they just want to keep fiddling around and tricking about and see what goes on and try and make your own strategy, or you've got your own strategy currently, or you've got somebody showing you how to do it. These are all the options you're ever going to need. Okay, I mean, half of these things, to be completely honest with you, I never used. I don't use any of this stuff apart from the pivot points. I do use other things for bits and pieces, but like I say, you got to find your strategy, and when you've got that strategy, you know exactly what you're using. What I want to do is I want to put these pivot points on my chart to give me a little bit more detail. So it's asking me if I want to have the support 3 and resistance 3 levels visible. You know what? I don't think we're going to see moves that are going to actually warrant having them, but why not? Let's chuck them in. What have I done there? Oh, they're in. Okay, just took a little while for it to work. So now you can see these pretty pictures, these pretty lines on the chart. What do they mean right now? Well, what we look for is we look for, price levels lining up with these pivot points, and there isn't anything right now. And what I am going to do is I'm going to go to chart options. I want to keep these pivot points on the charts that I'm going to go through now, rather than have to put them up again and again and again. So what I'm going to do here is I'm going to go over here and click set as default. Confirm. That's what I want to do. Okay, so nothing there on GBP US dollar. Now we're going to go down to NZD US dollar. Whoops, there it is. Alright, let's blow this puppy up. Alright, we start on the 15 minutes here. Let's go out to the daily. Daily chart. Okay. Actually, now I want to get rid of these. Actually, no, we can leave them there. They're not that much of a pain. So you can see on the daily here, all we're trying to do here is get a bigger picture idea of what's actually going on. We were in a lovely uptrend. We went sideways, then we went sideways again. Now we've broken down, and we've seen some very solid selling in here on the Kiwi against the dollar. Now on the daily, if I just come and go to drawing tools, support and resistance line, and just draw in where the price has bottomed out yesterday, just there. You can see we've got it roughly came to that level. It dabbled here a little bit, touched here, and it's just recently touched there. Now that to me doesn't, it's not really get me all that excited. On the daily chart, I can't see too much more. But what I want to do now is just zoom out a bit, get us to the weekly time frame. Okay, if I go to, oops, let's see if I can't. Okay, we're on week. All right, so you can come into the weekly time frame, and you can see there's been a bit of bouncing, bit of support and resistance through here, over here, and we're back to that level. Now this is a pretty significant level for the Kiwi against the dollar. You can see here, if it is to break down through there, and it's the last bit of support really to stop it from, who knows where it could get to. It's a very strong level. Now I'm certainly not saying that I'm looking to trade anything long off there yet, because clearly it would be going very, very powerfully against the trend, and we want to avoid going against the trend. But if I then zoom back out to the daily chart, you can see here, it's probably quite likely that we're going to see a bit of a bounce. I mean, look, it could just go straight down. It could go straight down. But right now, I just don't see any opportunity right now. If I saw something on the lower time frames, say the 4 hour, maybe consolidating, down at this level, so we've got a couple of touches there. If that was to continue to consolidate down there, I might trade a break of that. But the main thing that I wanted to point out to you guys was this level down here at what is it, 7460 or thereabouts. Maybe write that in your notes. Keep an eye on that level throughout the week, because there is a very real possibility that there might be some trades off of that level, possibly to the long side, possibly to the short side. Who knows? But it's definitely a level that I'm keeping my eyes on, and it's one that I believe that you should as well. That's the Kiwi against the US dollar. Let's have a look at US dollar CAD. Okay, dollar CAD. Just blow it up. Okay, dollar CAD. Well, not a lot going on there. Not in the 15-minute time frame. Let's go back up to the daily. Okay, so you can see here on the daily what's been going on. We were banging around this parity level for a long time. Now we've broken out really solidly from that level. Now, this is clearly in a very good trend, and if I come down, if I take you down to the next time frame lower, the 4 hour, you can see. I mustn't have clicked that, did I? There we go. Okay. So down on this 4 hour chart, you can see that we're setting higher highs and higher lows. Higher high, higher low, higher high, higher low. Okay. Notice again the little strategy, the little green bar in the buy zone, nice move. Little green bar in the buy zone, really nice move. When I refer to the buy zone, I'm in and around this 10 period and 20 period moving average. Now, if I'm not really interested in a trade right here on the 4 hour, but if I just want to point something out for you guys this week, over the next few days especially, what I would be looking or considering a trade on dollar CAD would be if I did get it pulled back into this zone in here, that buy zone that I was saying, in and around this 10 and 20 period moving average. If I saw it pull back in there and give me a nice green candle, then I'd be looking to trade the break of that candle with a stop at the low of it. Something along those lines, because trends need to pull back for them to be healthy to get ready for another run up and another move. That is what I'm looking for in here. If it pulls back into this buy zone, small green candle or bar, depending on what you look at, I'd be trading the break of that bar with a stop at the low of it. That's what I personally would be looking to do, and I think it's definitely a pair that you should be keeping your eye on, because yeah, dollar's definitely got some strength at the moment, and it's dollar CAD that we're seeing some good opportunities in. Okay, so I want to just jump across now and have a look at some of these yen pairs. So you start with euro yen. Okay, let's get euro yen up. Now, immediately, the first thing I see is this level of 100. Look at that. 100. Now, generally, support and resistance is a flat level with 2 or more touches at a very specific price level. Horizontal is all we really look to. And we will also have, if we have a look at the 100 there, it's been very strong level. Now, that doesn't, I mean, there's no trade right there for me just yet. Okay, there's certainly nothing going on for me right there. There's no trade, but it just points me out, it just stands out to me. Sorry, my tongue's getting all wrapped up. If I jump out to the daily, you can see here we're definitely in a downtrend. We're moving really well. Again, look, pull back into that sell zone, red candle, move lower. Looking for something like that on dollar CAD, except for obviously a green candle rather than a red candle. So nothing right now on euro. We'll check the 4 hour chart. Notice what I'm doing. I jump from time frame to time frame because I definitely want to have a big picture view. I want to know what's going on in the bigger picture, but I also want to have a look down the lower time frame to see if there's anything or any opportunities setting up. And there's nothing there on euro yen. Let's jump across to CAD yen. Okay. Quick question coming in: do I look at wave counts? No, that's not something that I look at all. I mean, I know that a lot of traders do look at the wave counts. I don't know too much about wave counts. I don't use them at all. No. Okay, so let's go back out to daily. Okay, so daily is in a downtrend. Notice we always start at the daily, we work our way backwards. Daily is in a downtrend. Come to the 4-hour chart. What have we got here? I missed it again, didn't I? I'm having a shock with that. 4-hour. Okay. 4 hours pulled back into the sell zone already and moved away. We're back in there, moving away. Let's see if the 15-minute offers us any opportunities. Not a great deal there. What I'm doing here, guys, is I'm looking to see if there's any pivot points, these coloured lines hanging around where the price is. If we're setting lower lows and lower highs on this lower time frame, if there's any levels of support and resistance around. There isn't any of these. There's none of the above, to be completely blunt. So I'll move on to the next yen. We'll go Swiss yen. Let's have a look at Swissy yen. Okay. So, okay, let me just point something out right here. I'm going to go to my drawing tools, get the horizontal line. That's the tool that I use more than any other tool, to be honest. So if I just draw in a level right there, what is it, 83.13, and just zoom in just a touch. Okay, you can see there's a bit of support there. Okay, it's not the best level of support I've ever seen. There's a few touches there. It's broken through. It's tested. It's bounced. It's bounced. It's held. It's bounced again. Then it's broken down through there. That's the sort of stuff that gets me interested. A nice flat level. I mean, you would have easily got a 1-to-1 out of that. Stop there. Entry there. I'm certainly not saying I took this. I'm not hindsight trading in any way, shape, or form. I'm just showing you for some of the things that I'm actually looking for. That's gone down to the 5-minute there. Zooming back out to the 15, you can see it through here. Okay, now one of the unfortunate things was this evening, just before the webinar was due to start, probably about an hour before, I had a list of a lot of trades that were potentially there for us to take together. And as Murphy's Law would have it, they all pretty much triggered before we could actually get in there and get stuck into it. Let's have a look. Okay, so Bank of America. Let's have a look at that. Alright, so I got a question here. Could do a stock analysis on Bank of America counter. Okay, let's have a quick little squiz here. We'll go out to the 1 day. Okie doke. What I see on Bank of America right now is, and I'm just going to call it how I see it. Okay, I'm going to analyze this chart like I analyze anything. One of the ways that I think, well, one of the ways that we teach anyway, that we teach to trade in the way that I certainly trade, and everybody here at Trade with Precision, is we treat a chart as a chart. Okay, so whether I'm trading a stock in the US, a commodity, foreign exchange, an index, I really don't care. I don't mind at all what the product is. What I need to have is I need to have a good flowing chart. I need to have a chart that's not full of really big gaps. This one's not too bad. Bank of America, I mean, sure, there are some gaps, but they're not out of control. And I need to see something with optimal chart structure, basically meaning a good trend. Now let's have a look here. The level that we're at is 7,000. Okay, right there, the round number. Let me just draw in a horizontal line around there, because I'm thinking we're going to see some support and resistance roughly around there. Yep. Okay, so we've got bouncing again here. We've got a couple of touches here, a couple of touches here. Let's see how far back we can actually inspect. Yes, looks like we've hit all-time lows and we've popped from there. Right, looking at it right now, Bank of America. This is we're on a weekly chart now. When I look at stocks, I like to look at the higher time frames. Okay, so I look at daily, weekly, monthly, because I swing trade stocks. Now, the simple purpose for that is, for me being in Sydney, you know, I'm asleep when America's trading, and I like my sleep, so I don't want to be trading. But just having a look at this right now. Okay, so reading what I see. What I see on the weekly is the price has pulled back to a level of support there. Okay, it's not a massively strong level, but there certainly is. What I want to do now is I want to draw in some Fibonacci. Have I got that? I have. Whoops. Fibonacci from the low to the high. Oh, now this is starting to become a little bit more interesting. Okay, let me just have a bit more. So, sticking with the weekly chart right now. Okay, sticking with the weekly chart. I just want to try and get rid of those pivots. Let's have a quick look here. Okay, now I'll just leave them as they are. I won't waste too much time. Okay, so you can see here, it's kind of hard to see, I'll be honest, because I've got such a cluster going on. But what I actually have got here is I've got this level, this horizontal line that I've drawn in. That is coinciding with the round number of 7 spot triple O. Okay, round numbers quite often work as support and resistance. So we've got that support and resistance. That's one thing. So let's just mark it down. We got one positive. We've got the round number of 7,000. That's two positives. We've got that clustering with a 61.8% fib. That's three positives. Okay. Now the one thing about this, if you were to take this trade, okay, if you were to take this trade, or if you were to look to trade around here, you're going to have the potential for a lot of reward. If this stock does bounce, then you're looking at a bounce back up to these old highs, and if it's the beginning of a new uptrend, then we are looking at it being potentially continuing in its uptrend and getting a massive move out of this. However, let's not count our chickens. Okay, let's not count them too quickly. What you have is you've got the potential for great reward. Mind you, the weekly candle has not closed yet. Okay, so we've still got tomorrow to go. So Saturday morning, have a check and see how it's looking, and maybe get your orders in there Monday if you like it. But what we have got is we've got the first pullback in an uptrend, possibly. So we've moved away, set a high. This could be, it looks like a great possibility for a turning point for Bank of America. If the candle is to close as it is, if this was a shut candle and I was looking to trade this, I'd have an entry as the break of the high of that candle, a stop at the low of that candle. Okay, now that's my analysis on Bank of America. I think there's potential there. I think this trade wouldn't be for everybody. It does carry a higher degree of risk looking on the weekly, but there's also the higher degree of reward. And when I say higher degree of risk, I don't mean you'd be risking any more than 1% of your capital or whatever your parameters are. Okay. What I mean is that the risk of this going against you and continuing in its downtrend when we go to the daily is probably quite high. Okay, but that's what I see on Bank of America. It's a lovely cluster. You've got some really good things all coming together here, and it's definitely one of interest. Let me just go all the way out to the monthly and see what that looks like as well. Alright, you know what? I wonder if we got that. Yep, we do. There we go. Okay. So yeah, the monthly still looks like we're just in a downtrend. Okay, well, that's enough on Bank of America. I've got another question. Craig, are you looking at the EMAs to enter? No, I'm not looking at the moving averages to enter. I'm looking at them for the zone. And I'll show you on soybean, which I've just been filled on by the look of it. So I want to make this very clear for everybody. Marilyn's asked the question, but I want to make sure that everybody's aware of how we're using these moving averages. So where am I? Go to the 4-hour chart. There we go. Okay, So there we have the 4-hour soybean chart. So what I'm doing here, Marilyn, and for everybody out there, I'm using the moving averages as a zone. So there's no, it's not. There's no science to it. There's no when it hits the 10 we sell, or when the 10 crosses through the 20 we buy or sell, or anything along those lines. What I'm simply doing is I'm just seeing, as well as you can, when price comes in, even in an uptrend, price moving back into this zone, moves away. Price moving back into that zone, move away. Price moving back into that zone, move away. It's a factor, it's a common occurrence in the market, and it's something that you spot, you notice, and you look to build an advantage or build an edge around that. So what I'm saying is that this is one of my ingredients. So I refer to these as ingredients like baking a cake. You can't bake a cake with cocoa alone, just like you shouldn't be trading off just one thing by itself. So what we've got here is we've got a confluence of events. We've got a downtrend on the 4-hour, a downtrend on the daily. We've got the price pulling back into the sell zone, coinciding with a level of support and resistance, coinciding with these recent lows. We've got a small red candle in this sell zone, which is also a bearish thing. Now look what happens when you get a nice small candle around these areas. We see a good move. So there's a number of things that I'm looking for there to build a picture about this trade. So I use the moving averages as a zone, as a guide to what to give me. I guess it's kind of like a heads up, as to prices into back to a point of equilibrium. Therefore, we're going to check it out. What is the best moving average use for stock and commodities? Oh, that's a great question. I don't know I don't know if it's any best. I think the best moving averages is the ones that you can use with your strategy that work for you. I use the 50, the 20, and the 10. The 20 and the 10 are my most the ones that I pay the most attention to, because of course for this particular strategy that we've just traded here, that's my my point where I'm looking to start to be interested in either buying or selling. Speaking of, I think there's the word commodities. Yeah, commodities. Speaking of commodities, well, we're short soybean. Let's go and have a look at coffee. And you know what? One of the great things as well about the platform, about CMC, and about trading strategy that you can trade on any market and any time frame is that you can actually do that. You can trade any market literally at any time frame. So some of you might be thinking, gosh, coffee, that's quite exotic. I have one a day, but I've never traded it. I might leave that one alone. Well, don't be scared of it. Once you've got a good strategy, and once you've got something that you can apply to any market, you can trade any market. You just learn to read a chart as opposed to having a relationship with any one stock or any one instrument. So let's have a look at coffee over here. Let's check out what we're seeing on the charts. I'll just pull coffee up pretty much randomly because the word commodities came up, and we'll go out to the daily. And once I get to the daily, I'm just going to save it at daily as well. Save as default. Okay, so coffee. Here we go. Example of we've come out of a sideways range. We're moving out. We've set some new highs for the most recent few months, possibly even the year. Yep. And we're sort of in a sideways consolidation right now. Let's just jump down to the 4-hour. Okay, hey look, price pulls away, back, small green candle in the buyer zone. We've got our 1-to-1. Now again, I'm certainly not hindsight trading. I can't stand when people do that. I'm just showing you this is the kind of thing. I just really want to point this out because there's admittedly, this evening there's not lots and lots of opportunities to trade. The soybean is the standout trade for us this evening by a long way at this stage. Okay, I'm going to go back and have a look through some of those yens again, but right now there's that's the trade. Something else to remember is you don't always you want to be looking for the right trades. You want to be patient enough. When there's a lot going on, trade a lot. When there's not a lot going on, just be patient. Okay, because you want to make money, so you just have to wait for your turn. Pulls back, move away. Nothing really going on now. We'll come down and we'll check out the 15-minute. Oops, what have I done there? No, there's not really. See, this is where the understanding of a trend is really important. We have a trend. We had a trend through here, higher highs and higher lows, giving us opportunities abound. Opportunities are plenty. Now what we've actually got is, see, we've come into this. I'll draw it in so it's very clear. We've come into this sort of consolidating period. Okay. Now we've got a low through here, and we're roughly banging around through here. We're just going sideways. We're grinding away. I really don't like trading in markets like that. Simply because I just prefer a trending market than a range-bound market. It's much, much harder to pick it. So we're going to move away from coffee and jump across at sugar. And by the way, if anyone's got anything else that they are looking at, and you'd like to let me, you'd like me to have a look at it and give you my opinion or what I see in it, feel free to. I've got no problem whatsoever with doing that, provided we can get the chart up. We're good to go. So let's have a look at raw sugar. Well, it's pretty evident here. Let me just point something out straight up. Once again, strong level of support. Now, don't worry. If you're not spotting those straight away, it's not a big deal. My eyes have been trained for this. I've been doing this for years. And you know what? You can either see it straight away or you can't. One of the best things is having this crosshair. If you are looking for support and resistance levels and you're quite new to it, the easiest way to do it is just drag the crosshair down slowly, looking at the horizontal line, until you see where there's 3 or more touches. Boom. Okay, just drag it along, see where there's 3 or more touches, and you want to be pretty specific. Like it's spiked down through there once, but that's a solid level of support. Anyway, back to the point. We've broken down through that. We've had our first pullback into the sell zone. Red candle in the sell zone. Move away. Geez, the charts at the moment are making that strategy look very good. So we are moving away from the averages. Let's get ourselves to the 4 hour and see if there's anything going on here. Okay, down here, what do we got? Not a great deal. See how there's a little red bar here, but we're not near the sell zone? That's not good enough. We need it up in here, around this 20. That'd be a nice trade, actually. Let's just go and have another. Oh, it's 4 hour though. Okay. So, okay. What do we got? What can I see here that might be beneficial for you? Okay, so there is a question here on MACD, how I use the MACD and RSI. And I'll answer that while giving you an idea for a possible trade, possibly for this week, okay, or even the next sort of 24 hours. So, how do I use the MACD and the RSI? In all honesty, I pretty much focus more on the MACD than the RSI, and I use it for what we call convergence and divergence. Now, there's a lot of stuff on that on the internet about what convergence and divergence is. Go and have a read on it, but the easiest way to explain it is that I want the indicators doing the same as the trend. If the trend is making lower lows and lower highs, I want the indicators to be doing exactly the same thing. Okay, now if you have a look here, here's a low on the indicator, new low, higher low on the indicator, new low, higher low on the indicator, new low, higher low on the indicator, and then generally when you see that sort of divergence, the general rule that that I look to work towards is that we generally see a pullback to the 50 period moving average. Okay, so you can see here there was a lot of divergence coming in, then we did see the price pull back, now we're breaking away and we're pushing lower, but this is not. I'd much rather see a very clean MACD. Simply put, how do I use it? Okay, when I'm trend following, in a perfect case scenario, I want to have the MACD making lower lows and lower highs in a downtrend, just the same as the price is. If it's divergent, I would certainly say don't get in your head that just because it's divergent, the market's going to go the opposite direction. We simply use it as a heads-up indication. There's no when it does this we buy, when it does that we sell. Again, it's one of our simple checklists. Some of our trading strategies, guys, have got 19 things to check off. Okay, now you don't need all 19. You need a minimum of 9. So between 9 and 19, there's a lot of scope. There's a lot of stuff to learn. It's very simple. As Warren Buffett said, trading and investing is simple. It's not easy. Okay, it's simple. It's not easy. So let's go down and have a look at some of these lower time frames and see if there's anything saying. Because there's something that's holding me to this chart. Maybe that's what it is. Okay, so you can see here what's happened. We've got price has been divergent, so price and the indicators have been divergent. Price has pulled back to the 50, which is kind of our point of equilibrium there for the divergence. We've also got the price bang up into this pivot point, this nice blue line. So what I'm going to do is I'm going to draw a fib level in from here to the low, and I'm going to see if we've got a cluster. Yeah, we do. What I'm trying to do here, guys, I'm trying to match up one of these pivot points. Well, not trying. I'm seeing if the pivot point matches up with either the 61.8% fib or the 50% fib, and it doesn't. 38 is too shallow. So there's nothing there. Let's go to the 60-minute. 60-minute. Again, price has moved away. It's pulled back into the sell zone. Little red candle, but look, I prefer a bit more of a deeper pullback. I mean, it's fine. There's nothing wrong with this trade. That previous bar, though, it's a little bit more bullish than I'd like. If the bar would stay like that, then that would be something that I'd be considering. But it's one of those trades. It's not setting my world on fire right now. I'm not just gonna, we've got a good trade on. We want to make sure that we only find other good trades to get into. There's been a quick request to have a look at a stock. I'll see if I can get it up. Okay, there she blows. Can I analyze it? Yes, I can. Alright, so at first glance, this stock looks like it has very low volume. Yeah, that's what it looks like to me. How can I tell? These bars, they're all over the shop. They're not very pretty. They're a bit gappy. Well, not really gappy, but they just look like it's come out of a robot. I know it's a weird thing to say. It's really hard to explain unless you've been looking at charts long enough to know what a stock that's got low volumes looks like, and this looks like one of them. But just reading what I've been given, it's a stock I would have liked to have bought back in 2009. Actually, back here we're in a great stock. We're in a good uptrend. I mean, it's as simple as that. We are in a great uptrend, and we've just broken out of a sideways consolidation. Well, when I say just, probably this year. And yeah, it's in a good uptrend. On the daily, we're kind of just sideways, I believe. Yeah, in the daily we're kind of just kicking along sideways. Bit of spikiness around here, maybe some news on the company, maybe some earnings or something like that. But as far as is there a trade here for me? No, there isn't. This is not a stock that I would look to trade personally, just simply because of the fact that it just doesn't look right. Something about it doesn't look right. I'm not sure what the volumes are, but it doesn't really matter. It doesn't look very pretty. Sounds strange, pretty, looking at pretty charts. We're looking to make money. I want a chart that's nice and it's flowing really nicely, and this one doesn't float my boat. Okay, so what else we got to look at here? I want to come back and have a look at cable. Let's get that up. That is a great question. I've just had a question on that last stock I looked at. Will it go to the next high? You know what? If I knew that, we'd all be rich. I don't know. All I can say is that it's in an uptrend, so therefore the probability of it continuing in its uptrend at this stage from the chart that I just saw is more probable than it going down. That's not to say it's not going to turn around. Please don't see that as a green light to go out and buy $1 million worth of that stock, because I'm not saying that. Okay, so let's go. We'll go to the 1 hour, see what's cracking down here. Yeah, not a great deal still. 15-minute. Let's have a look. Yeah, see, this is one of those times where the market doesn't look. I'll show you what I'm talking about. If I draw in that level there, okay, it's a clear level of support. No worries, buddy, for that question answered. So you can see, touch here, tried there, touch there, touch there, touch there, breakdown, retest, boom, good breakdown this time. Problem is, I mean, look, this is one of the trades that I wanted, I was hoping would set up for us. I mean, this is great. You've got a nice level of support here. When price breaks down through support, quite often it can test and reverse and confirm the break. This time, we've just seen it break down and break back up. I mean, it doesn't give the trader much joy. It doesn't give me much pleasure seeing that. There's not a lot I can do with that. What I was looking for is I was looking to see, hopefully, for it pushed down a bit further, maybe bounce off this pivot, draw a Fibonacci up into there. I'll show you what I mean. Just so you maybe get this idea for later in the week or on other markets. See, I was hoping for us to, sorry, have the price fall down to something like that pivot, that second one, bounce from there, come back up, the 50% clustering with this pivot here. That would have been my entry. My stop would have been up here. I mean, it's all coulda, shoulda, woulda type stuff, but that's the kind of thing I'm looking for, and it's just not provided me with the opportunities that that I was hoping for tonight. I'm going to jump across and have a look at a couple more yens, and then I'm going to leave you with some ideas, some other levels. The first level we looked at was the New Zealand US dollar, around that old, really strong support level. I'm going to have a quick look at Swissy yen, see how we're looking there. Oops, wrong one. CHF JPY. Pull up the chart here, and we'll see what we've got here. Any other questions, guys? Please fire them away. We've got about 5 or so minutes. I'm happy to answer them. Let's go to the 4 hour. I'll try that one out. Okay. Okay, so we're looking all right there. Again, a bit of divergence here. Excuse me, there's a little bit of divergence. We've rejected 83, the round number, something to be aware of. We certainly are aware of that. We're going to drill down here to the 5 minute, and we're going to have a look at some support and resistance if we've got any. So come in. Actually, let's do this again. I'm just going to draw that in there. Oh, excuse me, I'm just going to mute for 1 second. Sorry, I just need to get some water. So here's an example of possible opportunities. Now, again, this is not a trade that I believe we won't be taking this trade right now. We've got soybeans. This is a decent trade, but it's not in the league that soybeans is on. And let's just, before I go and say that, actually, let's just check this Fibonacci out. From there to there. Oops, drag it that way. That's what I want. Okay. So let's paint a picture. We've got support that got broken. We moved lower. Okay, there was a nice little break of that. We had a good move. That was one of those trades I was saying before that it happened before we actually got the opportunity. I'm not hindsight trading at all. Just be aware. When you see support and resistance levels this week, be aware of them. Have a plan for what to do around them. Build a strategy if you haven't already got one. So we've got 61.8% clustering nicely with this old support level. Old support quite often becomes new resistance. We've tested it once, we've pulled away, we're trying again. If we reject there, we could be seeing this roll over. So go back to the 15 minute. Actually, before I go any further, the one thing that does concern me a little bit is that we are above 83. If we saw on the 15 minute chart, see how we've got this, oh, come back, there it is. See how we've got this red candle. It's in the sell zone, okay, so we've got the red candle in the sell zone. We're rejecting this old level of support. We're rejecting the 62% fib level, 61.8. That all looks really good, and you know, it was kind of tempting, but like I said, we try and build a picture. The positives against the negatives. The positives, it's hitting that level. It's a small red candle. It's in the sell zone. Negatives. If you were to enter, you'd be entering on the low of that red candle, which would be, it would not be underneath. So let's have a look at that. Low 83.04. So it wouldn't be underneath the big number of 83. So potentially it could break down, hit 83 and bounce, going that's a negative. The other negative that we've got is, we remember up here at the 4 hour we had divergence, so there is a possibility at some stage that this will move back up into this sell zone, even as far as the 50 period moving average. That's another negative. Now generally with a trade, if I've got two negatives, I leave it. Okay, those two negatives alone, they are enough for me to leave this particular trade. And this is the difference between somebody I believe that is consistently making money and somebody who just trades. Okay, it's having the ability to really know what it is you're looking at, know what it is you're looking for, and have the confidence and the ability. You know, confidence comes from experience and ability, but having the strategies and the confidence and the ability that comes with time to be able to just go, you know what, hey, it looks all right, but I don't want to take all right trades. My business is trading, and I want to make money from trading, so I'm just going to sit this one out. So that's a prime example of what to do when it's close. If ever you're in it, see a trading opportunity, and you kind of go, do I want that? It's probably best just to leave it. If you're really questioning yourself, probably best just to leave it. So the last thing that I want to leave you with, I'm going to go over about a couple of minutes here, but it's another trading idea or another opportunity for you guys to keep an eye out for this week. And we are looking at Euro New Zealand, and I'm going to just dive straight out to the weekly chart. Straight out, and I'm going to draw in, you guessed it, support and resistance. I'm going to draw it in, bang, right there. Support here, okay, support there, broke down, support broke down, now we're up here as resistance. Okay, so that also coincides with 1.0700 or 7,000, a round number. Okay, so price on Euro Kiwi has run up, boom, into this level. It's rejecting that level. If I draw in some Fibonacci, like so, you can see that where price is, it's also in and around this 50% level. Am I shorting Euro New Zealand dollar? Not at all, not right now. I'm being aware of what's actually going on. If I come down to the daily chart, I start to see some things going on. We've hit that level on a big buy day. Boom, we sold straight off. We saw a nice green candle in the buy zone, broke up through excuse me, broke up through there. First thing it did, went up with gusto, smack, ran straight into that resistance and rolled back over. Now, this is a very early stage to be looking for possible shorts here, but that level cannot be sniffed at. You've got to see that level. You've got to be aware that it is there. You've got to see what price is actually showing us here. We've hit that level. We're rolling over. Now, if I come down to, say, the 4-hour chart, I didn't come down to the 4-hour chart. There we go. What you can see here is what a lot of people would call a double top. Now, mind you, this isn't something that was prepared earlier. I knew the level of Euro New Zealand. I was going to point out 1.7, but this is just reading the charts as we see them. As this level gets broken down here, that's a trend reversal. Okay, and we're very close to that now. I'm not saying to trade that by any stretch of the imagination. What I'm saying is that we've got price running up into a very strong level of resistance. Okay, we've set a lower high back up at that resistance, clearly rejecting that level. Now if we set a lower low, then we will be in a confirmed new downtrend, and then what I'll do is I'll be looking for shorts down on the 1 hour. There we go, where there is nothing just yet. Moving averages have just come into the correct order though, the 10 underneath the 20, underneath the 50. Then I'll be going down to the 15-minute chart and having a look in here. And there's nothing going on right now. So it's a very, very early stages, okay? But that level, you've got the euro against the Kiwi, okay, 1.7000. I'm looking for possibilities for shorts. If the trend does break down through that level we spoke of, and we do get some opportunities there to get short. On New Zealand US dollar, there was opportunities there. We've dropped down into a very strong level of support, and again, if the trend starts to reverse, I will be looking for longs there when I get some higher highs and higher lows coming in. And they're the main ones I'm looking for. Obviously, there was a couple of others like I think it was coffee and sugar we were looking at. But as I say, you've seen how I scan the markets, guys. I do a top-down approach, and I basically have you watch this, and you can click through your charts, find what it is you want, and away you go. So, guys, until next time, that was good. I hope that, well, first of all, I hope you enjoyed it. I hope you learned something. And secondly, it'd be nice if we made some money off the event as well. So, like I said, though, that trade's a cracker. I'm really happy with that. All you can do is have a plan, trade flawlessly on that plan. That's a flawless trade. We're happy to take that. We'll see how we go. Until we speak next time, guys, if you have any questions, pop it up now. Otherwise, I hope you have a great trading week and make heaps of money. Cheers, guys.